Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, September 26th, 2022. Let's take a look at the charts. Big sell-off again on last Friday. We opened and closed, obviously, below that rising channel bottom today at 285.27. This is our resistance for the week, and below which we should this week, possibly Monday, continue south into the equally meaningful, in fact, I'm going to say more meaningful, 260.55 to 265.26 area. 260.55 is a rising two-thirds speed line that is projected off the May low using the August high in its calculation. And we have a very simple classic channel bottom, horizontal at 265.26. This area is narrowing through the week, and it can absorb selling through October trade. And from here, the market can stabilize and turn higher into later October, still in reach of 333.47. And I'm going to say by the end of October is certainly a possibility here, especially with the heightened volatility. Upside, well, let's talk about the day itself. I've got 275.99 as an intraday pivot point. We did close just below it. It can contain intraday buying, and below which 265.26 is in reach today. And that is the start of a wide zone narrowing daily down to 260.55 that can absorb selling through October trade. Now, once we test this area, you may consider buying 320 out of the money calls that don't expire for at least several months as one particular play. Inversely, if we close today below 260.55, then we actually have a good high through the rest of the year. The market should then continue south. Let's find it. This is the weekly chart here. This shows it pretty well. I'm going to say by the end of November, 206.85, and by the end of the year, 190.47. This longer-term channel bottom that we actually tested in April slipped below it on an intra-week basis several times, but for all intents and purposes, it held nicely, and it could, let's say that we test this in December, if we close today, for instance, below 260.55. So let me set that up as well. If we close below 260.55, you may consider 190 out of the money puts that don't expire for at least several months. I'd go further out, probably 6 months. It could take a full 3 months to achieve. And if you bought a 3-month expiration, you really don't have much bang for your buck. So you want to go a little further out, buying the 190 out of the money puts that don't expire until I'd say at least March, April of next year. I think that is a good play. And then the market would then be expected to continue south to that 190.47 formation within 2 or 3 months of closing below 260.55. Until then, the 260.55 to 265, here it is, 265.26 area is well equipped to contain selling through October trade. And this is really kind of the day itself in the next 3 to 5 days. 285.27 resistance. Low to mid 260s support with the soft intraday pivot point at 275.99. All these levels have been carefully chosen for aggressive day traders. Now let's talk about 285.27. That if we do happen to close above 285.27, by the way, if we push, and I certainly don't expect us to open, but if we push through 285.27, we could reach 293.31 on an intraday basis, and I think that would be about it to the upside for the day itself. But closing above 285.27, and I also want to throw in that 285.22. I don't have it shown here in the support resistance, but while we're at it, if we close above 285.27, let's assume also a settlement above 285.22. Doing that closes the gap that played out between Thursday's low and Friday's high, and it's also clearly back above that channel structure at 285.27. That in itself is considered a failed sell signal, which is in essence a valid sign of strength as we continue into later week. If we close above 285.27, I think within 1 to 3 days we should rally back to the 302.09 former channel bottom, where by that point in time we may top out on a weekly basis and then fall off into Friday. It would be a settlement above 302.09. I think that should then yield within 2 or 3 weeks 333.47, that long-term channel top, able to contain buying through the balance of the year. And on the way up, of course, we've got 310.67 and 325.31. I do know that I have that shown a little bit better here on one of the other charts. There it is. 310.67 is a 50% upside retracement off of AB, as you can see here. That is the November high against the May low. That Fibonacci, that 50% retracement, obviously has won the day in terms of containing longer-term buying pressures, or at least near-term buying pressures on a multi-week basis. On the next attempt, I'm still going to keep it session containment. In hindsight, obviously, I probably should have called it a 3-star resistance, but I'm going to keep it as 1 star because on the next attempt, I do think it is susceptible to violation. And if we do close above 310.67, 325.31 expected within several days. And as I say, 333.47 within 2 or 3 weeks actually of closing above 302.09. 333.47 able to contain buying through the rest of the year. But we're not there just yet. In fact, we are pretty much right about here. This is a good chart to leave you with for the day. 285.27, that rising channel bottom able to contain weekly buying pressures, and below which the low to mid 260s are expected this week, possibly today, where we could bottom out through October and from there head back up to 333.47, perhaps by the end of October. And inversely, closing below 260.55 indicates the 190s or lower as we move into later year. And that is all I have. Please click like, please click subscribe each and every time you watch these videos. It helps us out a great deal. We'll be back tomorrow with Tuesday's Daily Tesla Report. You have a great day.